bigger the team, if you want to score, like you want to keep going, be good habits. The goal difference will come into play as well. But look, shows that they enjoy scoring goals. And Kyle seems a lot to prove because last year he was the of the game. But it's great to hear that from the winner.
And that will be the big concern for Coventry City. Here comes the second half of North London, and we go back to Andy Townsend. That's a Conor McNamara.
Changes mixing up over half time. Still unbeaten in each of the last 142 Premier League competitions in which they have led 2 goals from Coventry have yet to have a shot on target. Can Frank to just add a little bit more bite in this second half. It certainly won't be easy. Still, Ben White. Real fluidity to those 2 Arsenal goals scored tonight. Penetrating build-ups, pressure applied to defenders. Swift.
I think what's important, I mentioned that Martinelli got in too much with that second goal. I think that the back four, when they see players in front of them squeezing and are trying to apply pressure, they've got to get up behind, condense any space. Because they will, Saka, Joyce will stay high, wide, they'll try and keep that back line as deep as they can, which gives those midfield boys all the room to play. But you've got to be brave enough to step towards the halfway line.
Looking for Saka, who's going to slap. His flag is raised. Just jumps the gun there, goes Saka. Finishes to the front side. Scale of the task. Coventry here has not been less than anyone. Slumping in up to 45 nearly games against newly promoted teams is the largest of such early league history. Coventry, the top scoring team, senior English football last season, all of the top 4 divisions, they scored more than anyone else.
Comes out wide, so come on, is that not given?
She's way out here. Too close to David. He's played against Coventry before. Diesel was a black Brentford in the past. So they got Coventry sitting in the 3 of them. So with some involvement players on the pitch, he created the most chances in the first half. So Saka to right, can they run it? Towards the left around it. Doing it in style.
So strong. Again, waits, sorts it off to bit wide on exactly the right move. Sure as a slapping to be done. So what we find is coming. Anticipating that. He's got to stay on his feet, try to strong out, try and do that. It's a pretty soft goal. again, it's great, but just not getting close enough and tight enough to manage that pressure. Last third.
The only cup, Premier League goal, Susan Martin, I can't be keeping Southampton. Scores. Feels like to be getting against Arsenal's third.
Hello? Hello? Can you see me? On mute so that you talk. Hello? Hello? Hello?
Hello.
I check you
I
on
can
mute
hear
now. Okay. Good evening.
evening.
In our last class, we are still asking about which question?
The last question we treated.
I have given you now.
Okay, so
I
I will
share
check.
with you.
Okay, I will check.
I checked your WhatsApp now.
Okay.
I gave you the question. The only thing I asked you is I said go and calculate.
Okay.
I said go and calculate the tax liabilities, like we did the other examples.
Okay.
Have you done it?
I've not, sir.
You have not returned from your trip.
And I've been busy today. That's why.
I said you have not returned from your trip.
Yes, we have not returned. I'm still in Shandam.
Oh.
We haven't returned.
When are you coming back?
I don't know, maybe tomorrow.
Let's look at taxation of settlement, trust, and exit.
Okay.
It's the same thing under personal income tax. Yeah. In our calculation yesterday, we had a discussion on personal income tax, like how employee of an organization is expected to pay the tax, that's personal income tax, from all his or her income. So this one, the case of settlement, trust, and exit, it goes similar with the an individual workers. Though settlement, trust, and exit is about individuals who had personal investment or exit and entrusted in the hands of individuals to run such business and give benefit to the beneficiaries. Such individuals that work in that business, they are called trustee. For example, someone may build asset and entrusted or transfer such asset to some individuals to manage it. So they will normally run it as a business, and there are deeds for them to work on it. So you are expected to work in accordance with the deed of that business. So what is this settlement? Settlement is an agreement made in writing in which money is made available to another person for his or her use without any interference whatsoever. So if you trusted your wealth in the hands of an individual called trustee to run it without you interfering, it's just like an entity. But this one we call it settlement. So in computation of personal income tax, we look at settlement as a means by which enjoyment of an asset or part of it is transferred to another person, either through a deposition, trust, or covenants. It's just like an arrangement or transition of asset to a trustee for the benefit of other persons specified. So, like for example, I can build an asset and bring someone to manage that asset. So I will give a declarational, a specific agreement that you should pay the beneficiaries. Those beneficiaries could be my children, relations, or whosoever. It can be defined on the deed. So that is the meaning of settlement. In short, you can say settlement is an agreement made in writing, which money is made available to another person for his or her use without interference. What about trust? The term trust relates to equitable obligations binding a person called trustee to deal with a property or which he or she has custody, which is called the trust property, for the benefit of the person called beneficiaries. That is trust. Then the asset, it simply means the property of a deceased. That's the meaning of asset. It is a property of a deceased. Transfer to trustee to run it, and in lieu as an agreement or arrangement to pay the beneficiaries some entitlement. Therefore, you know that those beneficiaries that will be receiving income as benefit from the business of settlement, they are expected by law to pay personal income tax. So you are expected as an accountant to prepare the tax liabilities of this settlement. Then those who earn income from this settlement business, they are expected by law to pay personal income tax to the relevant tax authority. Now, these beneficiaries, as I said, they could have been, maybe they would be like children, they will have been adults, whichever the beneficiaries as it is. So if they ask you, can you define who is a beneficiary? You will simply say is a person who receives income from a settlement, trust, or exit. That's the meaning of beneficiary. So the relevant tax authority for the administration of settlement, trust, and exit is the state resident of the beneficiary, or where a trustee of a settlement or trust in Nigeria, where they are residing, the specific state that they are residing, that the Internal Revenue Service will collect such tax. Then what about the basic period? The basic period for assessment of settlement, trust, and exit is the preceding year. Like I told you, I explained to you yesterday. Preceding year. However, in computation of settlement, trust, and exit, you may come across maybe the property they are receiving interest, dividends, rental income, all of them. There are categories. It could be earned or unearned income, based on our discussion yesterday. I hope you have not forgotten. Hello? I hope you are not forgotten. Are you there or you are run out? Hello? Are you there? Hello?
Hello, sir.
Uh,
Actually, can you send me the passport? I'm doing the thing now.
you were in the class now.
Huh?
I say you are in the class. Which passport I get?
Yes, the passport for the class.
Okay, sir. I'm back. Network. Hi, network. I can't hear you, sir.
You're not hearing me?
Yeah, I can hear you now.
I said the basic period for assessment of the settlement trust and exit is on preceding year basis. Preceding year basis. Meaning that the transaction that happened in the last year will be assessed for this year. Note that the commencement and cessation provision do not apply under settlement trust and exit. We are going to look at that under company income tax, CIT. What are those items that are allowable, and what are those items that are not allowable? You know, there are some expenses that are allowable when you are calculating personal income tax under settlement trust and exit. So the allowable expenses to an exit include: one, expenses of the trustee or executor or administrator connected with the settlement, meaning that their salaries and other expenses that incur as being authorized by trust deed or will is considered. Then any fixed annuity, annuity means that, I hope you have not forgotten your knowledge of computing annuity. So the owners of the settlement will request the trustee that every year he, the trustee or executor, should be paying the beneficiary a fixed amount from the income. That is the meaning of annuity. So such amount of the expenses is allowed. Are you following?
Yes, sir.
Now, in computing of income from settlement trust and exit, the first thing that you do is you determine the computed income, which is simple, the difference between the total income and allowable expenses, as I mentioned earlier. The income of the trustee or settlement include any gain or profit from a trade, business, profession, or vacation, or a rent or premium. Such additions and expenses shall ordinarily be taken into account. So you calculate the end income plus the benefit in kind, deduct all the allowable expenses, as I mentioned, then you will get the computed income. There is fixed expenses that is being defined by the trust deed. So under the taxation of settlement, trust, and exit, we also have capital allowance. And this capital allowance is granted on the use of asset. Is granted on the use of asset. That asset has been used strictly for the operations of business. No balancing allowance or charge shall be given or made to individual in respect of the asset for that year. Now, discretionary payment is also an expenses incurred within the power of the trustee. That is the word discretional. The deed gave power to trustee to spend certain amount of money for running the business. So that one is being described as what? Discretional payment. That is why you see they are saying where the instrument authorizing the making of discretionary payment, it will be generally provide for the apportionment of the net income after such payment. So, however, take note that this discretionary payment, they are not expenses, but just an appropriation of the income of the excess. The trustee may decide, aside from the amount that we are giving or we are being authorized by the owners or the owners of the excess to pay the beneficiaries. Within our power, we will make an additional payment. That's discretionary payment. I hope it's understood.
Yes, sir.
Now, I think those are the major aspects that you need to understand in this section of taxation of settlement, trust, and exit. The account of the exit is being prepared to 31st December every year. So other information, you will read it all over.
Network.
But that's over.
Okay. That's a network.
We are going to look at one example now, quickly. Pass. I've sent the question to you.
Okay, sir.
I've sent the question to you. So any questions that you see that I'm sharing with you, they are very, very important. And it
Okay,
can,
sir.
the possibility, you see such.
Also, sir, you can also send the material. The material for the explanation.
You didn't have it?
Yes.
You didn't have the pack?
I've seen the question. I mean the material for the explanation.
Okay. Have you seen the question?
Yes.
Okay.
As if the question is hot. The question did start from the beginning.
It didn't start from the beginning.
Okay. I'm seeing it.
Look at it carefully.
Question 3. Baba Ali Musa.
Read it for us.
Okay. Baba Ali Musa is a trustee of a settlement.
Proceed now.
Yeah, I've seen it, sir.
Oh yeah. Proceed with the reading.
Okay. Baba Ali Musa is the trustee of a settlement made by late Malam Junat in favor Malam Junat Diko in favor of his 4 children, grandchildren, and others. He submitted the following information to the Zamfara State Internal Revenue Service for assessment purposes for the fiscal year December 31st, 2024. Interest received 2 million, dividend gross 8 million, rental income 6 million, business profit 18 million, miscellaneous income. We have trustee remuneration. That's 2 million and 3,200,000. Fixed 2% of this income. We have 450,000. Fixed annuity to grandchildren. Aminat 50,000. Daladi 30,000. Admin expenses 2,600,000. Additional information. Trustee made discretionary payment in lying with the trust deed. The beneficiaries as follows. A. Wakili. Wakili 150. Aishat 200,000. Ilyasu 250,000. And Badamasi 180,000. 1 and 2. Each beneficiary is entitled to 1/6 share of the thirds of the distributable income. Capital 3. Capital allowance agreed with relevant tax authority 4,200,000. Required. Compute the net income accessible in the hands of accessible income beneficiary. That's all.
The requirement
Hello?
is what? The requirement is to calculate what?
Compute the net income accessible in the hands of the trustee. That's A. Then B. Accessible income in the hands of each beneficiary.
There's two things there.
Yes.
Calculate. There are two things there which they ask us to do. Calculate compute the, is it net income accessible net income accessible in the
Yes.
hands of the trustee. Then also calculate the what? Accessible income in the hands of each beneficiary. And the third question will also be that calculate the tax. Those beneficiaries, they earn income. Therefore, they are expected by law to pay tax to the relevant tax authority. So all this work is for accountant to do. So let's quickly proceed. I told you in our discussion yesterday, I said, once when you are calculating personal income tax, you will start with what? What did I say?
You start with the preceding year.
No, that's not what I said. What was the first item for consideration?
Okay, salary.
And income. Don't tell me salary. And income. And income. So in the taxation of settlement, trust and exit, you will start with all the income, both the earned income and unearned income. I gave you the list of earned income and the list of unearned income. All you will compute it so that you will have your gross income, right?
Yes, sir.
So in this case, this is just like a one-man business. It's an exit, management of property. When somebody have property and entrusted it as an agreement, handed it over to some person as trustee that manage this property for me, and this is the deed or the will I have given you. In running this property, all the income that you will earn in the course of running this property, he gave them a deed that pay my grandchildren or pay my relations so amount, even in my absence. That one is fixed, is contained in the deed of that agreement of settlement. Then you know that in the course of running the business of that exit, You will receive income, right? The income that you receive in the course of running that business. What do we normally receive when we are running an estate business? Is it no rental income?
Yes.
So that is majorly. And moreover, if the business also engage into trading or doing some business, you may have profit. So let's start with what are the income? End income. Let's start with what? Interest receipt. You know, in the case of this one, it's no longer salary. Interest receipt.
Yes, sir.
You are considering income now. End income. What are the interest receipt? How much?
It's 2 million.
Interest receipt. Eh?
2 million.
So you record 2 million here. Okay.
Yes.
Then
Sir.
I told you you calculate also what? Dividends. Do we have dividend?
Yes.
How much is dividend?
8 million.
How much? 8 million. So you see, since it is gross, no need for you to divide it by 90. If they told you that dividends is net, then you are going to divide that amount by 90%.
90. Okay.
But this time around is gross, so we can calculate it direct. It has not suffered taxation. 8 million. Okay. Then
Yes.
rental income. Rental income. How much is the rental income?
Okay.
How much is the rental income?
Okay, rental income 6 million.
You add it up.
6 million. Okay.
Yes. Add it up. Are you following?
Yes, sir.
6 million. Be copying it up.
Yes, sir.
Rental income is 6 million. Now, do we have any other income? They told us that
They have business profit.
business profit. How much?
Business
profit.
profit is 18 million.
Yes. So business profit is 18 million. So you have to make an adjustment. Business profit. I hope you are copying.
Yes.
Business profit. Okay. It's 18 million. So we have to make adjustment. They run a business and they generate 18 million. That's a profit. Therefore, you know actually that if you run a business, a depreciation should be considered. But in this case, in taxation, I told you that the depreciation is not allowable. Depreciation is disallowable expenses. The only thing the tax authority recognize is the capital allowance. They will grant you capital allowance for the use of your asset, the asset that you deploy for your primary operations. So we have capital allowance. How much is capital allowance?
Okay.
How much is capital allowance?
Okay, so I'm trying to check.
Look at additional information 3.
Okay,
Additional
capital
information 3.
allowance is 2 million 4,200,000.
So you will deduct it from this profit, 4,200,000. They claim that when you remove 4,200,000 from 18 million, how much are you going to have?
Okay, let me.
You are taking much time.
Okay, sorry, sir.
You didn't have your
18.
calculator there.
Yes, I have my calculator.
And calculate now and give me an answer.
13,800,000.
13
The answer
million.
is that 800,000.
Good. 13,800,000. Good.
Yes.
So we have less capital allowance. Any other income? Do we have any other income?
Let me check.
Check under the income. Do we have any other income? Miscellaneous. Miscellaneous.
Miscellaneous income.
How much?
3,200,000.
Okay. So this is the income. This is the income, both the earned and unearned. Both the earned and unearned income. Calculate all of them. How much do we have?
Okay, sir. $17 million.
Huh?
That including the other income.
Which one is other income again?
From the interest received.
That is all. Those are the income now.
Okay,
all of them,
okay.
they are income now.
Okay.
All of them are income. All of them are income.
All right, sir. I'm calculating it. It's 33 million. The answer is 33 million.
Only?
Yes, sir.
33 million only?
Yes.
33 million. 33 million. We call this one what? This is gross income. Gross income. Now, after when you have gotten your gross income, the next thing, if you are calculating the taxation of settlement, trust, and exit, meaning that we have dealt with both the earned and unearned income in our own consideration or discussion for taxation of employment income. So we are looking at this one has what? Under settlement, trust, and exit. Gross income. So let's consider the allowable expenses. Allowable expenses. Allowable expenses. What are the allowable expenses? Is there any salary received by trustee is allowable by law?
There is a trustee remuneration.
Remuneration. Trustee
Yes.
remuneration.
We
Remuneration.
have the fixed one.
Trustee remuneration.
Yes.
How much is the fixed remuneration? That one is being given by them by deed. Fixed remuneration. How much?
We have the fixed 2% gross income.
2% of what?
I mean, 2% of gross income. 2% of gross income.
As what?
As 450.
Take it now. Take the percentage and give me the answer.
Okay.
Take the percentage and give me answer.
That's 660,000.
Is that correct?
Yes, sir.
What is the fixed? What is the fixed remuneration we are talking about? What is the fixed remuneration? Go back to your question.
Is 450,000.
The fixed remuneration?
Yes.
$450,000.
Yes, 450.
That is the remuneration granted to the trustee,
the
right?
2%. Yes.
So let's write 450. Another thing.
And they say fixed annuity to grandchildren. Fixed annuity to grandchildren.
Yes. How much?
I mean at 50,000.
Yes.
Danladi 30,000. And admin expenses.
So all what we need to do is let's treat the direct one first. Remuneration. Danladi. How much is Danladi?
Danladi 30,000.
Fixed annuity to grandchildren. But are we treated? I'm coming. The trustee remuneration, they said fixed amount is 50,000. 450. Then how much will be the variable? You see, there is two things here. We have not treated it. Let's not jump to one issues while we have not done with the other one. Fixed trustee remuneration, fixed 2% of the gross income, 450. Are you following?
Yes.
So the variable of the gross income, that's 2% variable gross income. So what is the gross income?
Okay. Let me calculate it. The gross income is 33 million.
So take the 2% of the gross income.
Is 660,000.
How much?
660,000.
660,000. Good. So that's what I want you to do. Variable. Which is 2% times this 33. So it says 660,000. Yes, that's what I expected you. Then the allowable expenses again is what? Fixed annuity given to what?
Sir?
We have not yet finished now. Fixed annuity given to his grandchildren.
We have Daladi, we have Aishat, Aminat.
How much?
Aminat is 50,000.
Amina. 50,000. Yes. Danladi.
We have Daladi, 30,000.
Yes.
Aside
from that, admin expenses, right?
Yes.
How much?
2,600,000.
Good. So can we have the total now?
Okay.
These are the allowable expenses granted by law, by the deed. 450 plus 660,000 plus 50,000 plus 30,000 plus 2,600,000 equal to. How much do we have?
Okay, sir.
How much do we have?
We have 3,790,000.
3,790,000. Okay. This is the allowable expenses. So remove it from the gross income. When we remove it from the gross income, we are going to have our computed income. Computed. When you deduct it, how much do you have?
Okay,
How much do you have as how much do you have as computed income? Deduct it from the
is 3 million.
No. How can it be 3 million? When you deduct from 33 million.
Okay, I'm coming. Is 29,210,000.
So this is our computed income. $29,210,000. Now, let's proceed. We are going to look at the discretional income. Sorry, expenses. Discretional payment, which I told you is an appropriation. Is an appropriation under the power of the trustee. The trustee may decide if they make more money. They may decide within their power to add more payment or income, an additional income to the beneficiaries. So this payment is being within the power of the trustee. The deed of the exit or settlement permitted them, if they make more money or more profit, they are permitted by that deed to pay additional payment to the beneficiaries. So in this scenario, what are those discretionary payments made by the trustee? Let's have them one after the other. You are not seeing it? Let's be fast. I want to sleep now, so that you will also go and
I'm
sleep.
seeing it now.
What is the discretionary payment?
Okay.
Look at additional information 2. Each beneficiary is entitled to 1/6 share of the third of the distributable income. No, that's not discretionary payment. One additional information. One, the trustee
made discretionary payment in line with the trust deed to the beneficiary as follows.
Good. So you have to deduct it.
We have for kilo 150,000.
150. Okay. Next is what?
Aishat.
How much?
Aishat 200,000.
200,000. Next.
Ilyasu.
How much?
250,000. 250.
Next.
Badamasi 180.
So this is a discretionary payment. I gave you the definition of discretionary payment. I hope you have taken it. How much total?
Okay.
You have to be fast, oh.
Okay, sir.
So you deduct the discretionary payment. When you deduct, how much do you have?
The total 718,000.
Deduct it, remove it from 29,200,000. How much do you have?
Okay. 29.
Now we are having, by law, we have to remove from.
We have 29,209,000.
That's not correct.
So,
check it again.
Okay, 28,430,000.
Good. You have to be very, very conversant with your calculator.
Okay,
you know,
sir.
in ICANN, you have to be very, very smart and accurate. So the francs, another deduction that we have to make by the format is francs investment. If you have francs investment is an investment of what? Unearned income. That is the dividends. You know, dividends in a nutshell, dividends is not supposed to suffer taxation. So you have to remove it before you distribute it. Before you distribute it to the beneficiaries. So less franc investment. How much is franc investment?
Okay, let me check.
How much is Frank's investment?
France. I didn't see it. Oh.
How much is Frank's investment? What did I explain Frank's investment to you? What did I say as Frank's investment? I said Frank's investment are type of investment where it does not require the physical presence of the owners, such as dividends. Dividends received is Frank investment.
Okay.
Dividends received is Frank investment. So Frank's investment, you deduct the Frank investment, which is 8 million. This is a format, so you have to follow it the way it is. What left here is 420,330,000. And this is amount available for distribution. Amount available for distribution. So let's look at what the question is saying. What did they say we should do with the distributable income? Look at additional information too.
Okay.
What is additional information two is saying?
They say each beneficiary is entitled to 1/6 share of 2/3 of the distribution income.
1/6. 1/6 share of the 2/3 of the distributable income. So you will say distribution to beneficiary. And who are the beneficiary? Distribution to beneficiary. Who are they? We have what? Wakili. They told us that 1/6 of the 2/3. So first, you will calculate the 2/3. Have you copied this one? So that I will erase this place. Have you copied this one? Talk now. Are you there? Hello? You are not hearing me again. Are you not hearing me? You mute yourself now. I'm not hearing you. You muted yourself. I say you mute yourself. Unmute yourself now. Unmute yourself. unmute yourself. If you cannot unmute yourself, how will I hear you?
Okay, sir.
You have to be checking now. Even you cannot hear me, you should be seeing the screen now.
Okay, sorry, sir.
You should be communicating so that I will know. So now you are talking, I'm even seeing on the screen. Even I cannot hear you. So I'm saying that you should unmute yourself.
Yeah, sorry, sir.
We are distributing this amount available for distribution to the beneficiaries. And I'm asking you, who are the beneficiaries?
We have their Wakilu.
Wakilu.
We have
How much?
Aisha. Wakilu 150.
What? No, it cannot be like that.
Okay.
Have you copied this site so that I will erase it now?
Yes, I've copied it.
So they said, what the question is saying, they said each beneficiary is entitled to 1/6 share of the 2/3 of the distributable income. The distributable income is 20,450,000. So they say we should remove 2/3 of it. That is times 2/3. So when you take 2/3 of 20,450,000, how much do you have?
Okay.
How much do you have?
I'm coming, sir. 20,430,000.
450 or not 430? Is it 430 or 450? 430.
It's 430, not 450, sir.
That's what I'm saying. 430. How much do you get?
Okay. 5/3.
Take 2/3 of it.
It's 13,620,000.
30 million what?
620,000.
Divided by 3 times 20,430. 1, 2, 3. 13 13,620. Okay. So this is the 2/3 of the distributable income. And they said that this is the amount we should share it to the beneficiary. Now that means Wakilu will got 1/6 times 13,620 million. Aishat will also got 1/6 times 13,620. Okay. Iliasu will got 1/6 times 13,620. Okay. Then Badamasi one over 6 times 13,620. So can we share that?
Yes, sir.
This is how much? 2,270. 2,270. 2,270.
That is 2,270,000.
Yeah. So times 4. So how much do you have there?
2,270,000.
Each of them?
Yes.
So when you have that, how many of them? Amina is still there also.
Okay.
Amina is also part of the beneficiary. All of them. So when you have that, you calculate it and you get the total as 13,620,000. Okay?
Yes, sir.
So 13,620,000 deduct from the amount available for distribution. This is 13,620,000. So when you deduct it now, how much are you going to have?
Deduct. Is it from 30 million?
Yes, this is 30 million. Remove it from 20 million. How much do you have?
Okay, I'm coming. We have 11,350,000.
That's not correct. How can it be 11 million? When you remove 30 million from 20 million, 430, you should have.
Okay, 20 million for 430. Okay, I'm coming.
There's nowhere to go but up. If we just decide in our hearts that we want to believe in Nigeria and we want to take
This is the money left in the hand of the trustee. Balance in the hands of trustee.
Destiny of Nigeria is in our hands. We are the country.
So when you calculate, remove 13,620,000 amount distributed to the beneficiaries. Amount distributed to beneficiaries. So you have balance in the hands of trustee, that's 6,810,000. Check it and let me know.
Okay, is 6,810,000.
Good. That is the money available in the hands of trustee after the distributions. So it's an arrangement. Settlement is an arrangement.
Yeah.
Any question? Now, you see this money now. At this point, the examiner will also ask you further to calculate the taxable amount available in the hands of the beneficiaries and their tax liability. So you will calculate all their income, their fixed income, that's fixed annuity, earned by the beneficiaries, and their distributable income. You calculate them all, plus the discretionary payment made to them. All of them are income to them. Calculate all of them, then you will take the tax liability of it. You will apply the tax rate that I told you. I hope you can able to do it also. You said Wakilu. The total income of Wakilu, you start with the how much the fixed income or fixed annuity. Wakilu, did Wakilu has anything like fixed annuity, you bring it. If it do not have, you record 0. Aishat, did you have any fixed annuity, you record it. Daladi, did you have any fixed annuity, you record it. You understand? Iliasu, Badamisi. So you add all their income, have the total for each of the beneficiary income. Then you are going to perform the calculation of tax liability for each. You apply that formula that I gave you yesterday. That's all about this taxation of settlement, exit, and trust.
Okay.
So any other question?
No question.
So good night, ba.
Okay, sir. Thank you. Please send me the material for the.
Which one? The study pack?
And the theory part.
Study pack. I'll send it to you.
Thank you.
You are not a procrastinator. You've just got a habit of procrastinating. And in the next 8 seconds, I'm going to tell you why you got this particular habit and how you can break that habit of procrastination. Observe carefully. Let this circle over here represent your mind. And let this small circle below over here represent your body. I'm going to divide the top half of the circle into parts. The upper part is called as your conscious mind. The lower part is called as the subconscious mind. Now observe carefully. Your conscious mind has got all the knowledge in the world. Your conscious mind knows what to do. Your conscious mind knows health is wealth. Your conscious mind knows that you've got to wake up early in the morning. Your conscious mind knows that it's to get, it's not good to be angry. सब कुछ परम ज्ञान आपके पास है, your degrees, your YouTubing, etc. However, your body is not taking action. The knowledge you already have, and that's why you're not getting the results. Why is that? Because
clearly.
Or what we call as the subconscious mind. Until and unless we program your subconscious mind, which is your emotional mind, your body is never going to take action on the knowledge you already have. If you really want to get the result of
Báwo ni àrẹ mi kébù lè mú mọ́tò wú ká kó débi wúri àwọn. Kébù là nám là kẹ́.
Is it